In this next section, we're going to be looking at bullish entries, how to know when to enter a trade looking for further upside. It's the number one question that new traders have. How do I know when to buy? And in order to answer that question, we need to have confidence in our ability to identify support and resistance levels. That support and resistance is going to be the scaffolding of our trade plan. When we see the price bounce off of a key support, we're looking for an entry for a continuation move to the upside. When we see a key resistance level break, that shows that the bulls have strength, and we're looking for more movement to the upside as well. So in able to identify these key support levels, we're going to be looking at three things. The first is the previous price history. Where has the price bounced off of in the past, and where can we expect it to bounce off of in the future? Moving averages, we just went over those a little bit, but we're going to be looking at how they interact with the price on the chart and seeing those support levels hold. When the price is above a moving average, it acts as support. And then psychological levels. As we know, these charts are depicting human emotion, and humans sure like nice round numbers. And we'll see that time and time again, where a nice even round number will act as support or resistance, and if the price is above that nice round number, it's going to likely act as support. Now we're looking at previous price history and how to use that to establish support levels. The past is a place of reference, not a place of residence. And that rings true with charts. Looking at what has occurred in the past can give us some indication on what is most likely to occur in the future, but it's not going to tell us for a sure thing. So it's only going to tilt the odds in our favor, which is all we're looking for as traders, to have a little slight edge over what to expect in the future. So to look into the past, we need to see, where did the stock previously find support? If we see time and time again a certain stock bouncing off of a certain level, we know that it is more likely than not that that level will act as support in the future as well. Where did the stock previously find resistance that it is now trading above? The fundamental rule of technical analysis is that when the stock is above a key level, it acts as support, and when it's below it, it acts as resistance. So if we have a very tough resistance level and then we break above it, that instantly becomes support. And the stronger the resistance, the stronger that will be as support on the way back down. And we call that a back test, when we break through a key resistance level and then pull back and test it as support to see if that level has then turned into support, which it usually does. Using multiple time frames to get a clear picture of what to be looking at. And that is a really important thing to be doing here with technical analysis and charts. We can get more information the more time frames we use, and oftentimes we will see support levels on multiple time frames line up, and that strengthens the support and can increase the odds that we do bounce off of that specific level. So let's break these down a little bit further and look at some examples. So in these next examples, we're going to be looking at multiple time frames to get a whole bunch of information and put it all together to get a clear picture as to what's going on and what to expect moving forward. And in this instance, we're looking at XON on the daily and weekly time frame. This is the daily chart from March through June 2016, where each candlestick represents one trading day worth of action. So the first thing I'll do when I look at a chart is just get a rough idea visually of where does the price appear to be bouncing off of. And I'll put my cursor on the chart and see that line right there, and I'm interested in where the candlesticks continue to close above. So even though we have candlesticks dipping well below a line that I might look at visually here, it's the close of the candlesticks that I care about. So I'll put that there, and I can see we're finding support at about $23.90, $24. So I'll use that rough psychological number 24 and say, okay, it seems we're defending $24, and then I'll go in and individually look at these candlesticks and see the highs and the lows and the closes. So we dipped to 23.35, but we closed well above 24. Dipped down to 22.81, but closed at 24.35, so still maintain that level. Here's a couple examples. We bounced right off of it, 24.06, 24.06, and then we're building a base here, leveling out, trading right at that $24 level. So then I'll zoom out and look at the weekly time frame, and I'll put that line there to get that visual representation again, and it's just watching how these candlesticks react to that level. And I can see time and time again, big, long lower wicks with the bulls defending that level and ensuring that the price closes above $24. So using this information, I can now say we have held $24 in all of 2016, bouncing off of it time and time again, and we are currently trading just above that level. So I know that if we dip below $24, the more likely than not scenario is that the bulls will buy that dip and continue to close above it. because just looking at the past, I can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times that has happened in 2016. So I can see that the price is getting tighter and tighter as the range shrinks here, but that support level is still holding, and I can know that if we close below $24, that would be a potential red flag for the bulls because it has closed below a support level that has held previously 10 times. So I could be establishing a trading game plan based around this support and knowing what the red flag would be for my game plan if that key support level were lost. In this example, we're looking at BABA on the daily and weekly time frame, and we're having a focus on where key resistance levels were in the past and looking for them to act as support in the future. So this is the daily chart from April through July 2016, and I can see that we had some resistance in the same general area, and then we did make a bullish break and a nice strong breakout for the bulls to the upside. So I would be zooming in here and trying to find where was this resistance level that the bulls made a nice breakout of. And it's not exactly clear. We're seeing in the low $80 range. There's some resistance here in the 81.70s, but then we got up to 82 before pulling back, and then up again here to 81.90. So not a very clear picture. So I'll zoom out, use a different time frame, see if I can get any other clues and a little bit more visual representation in a clear fashion. And I'm looking at the same area here. This is the weekly time frame, a lot more information, a year and a half of price action. And looking at the same area that I was just looking at on the daily chart, it is very, very clear that that resistance level is all occurring right at this $80 psychological point. And this is the same time frame from March through June. And I can see that even though we see clear moves above that $80 on the weekly time frame, it's the close of the candlesticks that I'm concerned with. And I can see pretty much 8 rejections in a row before the bulls finally get above that level and then break out. So just comparing again, this is the daily chart. And that $80 psychological level doesn't stand out here as significantly as it does on the weekly because we did close above it on the daily time frame multiple times, but could not be more clear on this weekly time frame, that big wall of resistance that eventually saw a break and led to a breakout, because as soon as that key resistance level broke, the bulls had a lot of strength and continued the move to the upside. So I know $80 was tough resistance. And after this breakout, let's say I don't want to chase BABA. I say, oh man, I missed that move. Nice strong breakout. I'm going to keep watching this one out of the corner of my eye, check in on it every week or so, and just keep an eye out, because if we do pull back down to that $80 level, I can anticipate it to be some nice strong support and then potentially time a bullish entry off of that level. So we see here the price was getting tighter and tighter, where we had a higher low but continued lower highs. So tighter, flat trading, and a bullish break. So if we pull back down towards that $80 level, anytime really in the next year, then I can be looking for an entry based off of previous history. And so then I'll want to go and look back further. Why is this $80 level so significant? And I'll zoom out and look at pretty much the entire trading history of BABA since the IPO. And I'll look back to September 2014. And I can see that in this history, where does this $80 level come from and why is it important? So I'll put my cursor on $80 and look at the previous action around that level. And I can see that we built a base at $80 support on the initial pullback from the all-time highs for BABA after that IPO. So right here at $80, I can see we built a base of support. And as soon as that support level was lost, we had a big time dump. So that was a key support level because breaking it, the bears took complete control of the trend. And then we see here that it acted as resistance. So previous support acting as resistance, and I'll anticipate it to act as support again if we do ever head back down towards that $80 level. So we're currently trading about 20% above $80. And again, if I don't want to chase, this is something that I'll just keep my eye on for a very long time, being very patient. There's no rush to get in here. And if I'm playing other trades, this is just one to put on the back burner. And maybe a year from now, I'll see this nice long-term support level get tested, and I'll be able to establish a bullish trade off of that previous resistance now to act as support.